Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market. This is the crypto market, the stock market, the oil market, and any other way we can make some or a lot of money on the internet. Load of discussion today. We have a variety of important conversations. Let me just find those for you. I am looking for them. Here we go. We've got Bitcoin strong back up to, we've got oil at $85 as the US-Iran conflict rumbles on. We've got Meta acquiring AI agent social network, Moltbook. Meta really just buying everything when they seem to like it. And we've got Bitcoin falling beneath 70K again. So we'll talk assets as usual. We'll talk the major moves in the market and some of the developments in the Middle East as usual. And we'll get into this conversation around Moltbook, which Legendary is obviously specializing in as someone more involved in the agentic space at the moment. Also today, delighted to say we're going to have Mav from Cerebro joining us towards the end of the show. Going to have an interesting conversation on Cerebro, the app that he is building, the portfolio tracker, and to understand if there's any interesting data and insights that they are getting from understanding what all of these people are doing on chain. So very interested on the data side. Looking forward to that conversation in just a little bit today. But before we get there, as usual, guys, just a reminder that this show is not financial advice. This market is very, very risky. We do not know anything for sure, so please do proceed with caution at all times and exercise your own judgment. With that out of the way, Legendary, it's Wednesday. It's the 11th of March. How are you doing? How are you feeling?
GM, doing quite well. Found some more time this morning and yesterday to, on the one hand, be working on my taxes, and on the other hand, the more fun stuff, working on my GigaBrain plugin. And the cool thing is, so there's two cool things. I started to get PRs in GitHub with people suggesting new features or stuff that would make it a cooler experience. And that's just nice when you see, even if it's written by AI or not, that just doesn't matter to me, that you have people who are like wanting to contribute to that. So that's a cool experience. That's something I obviously haven't had before. And the other thing is, because we spoke about the Carpathy auto research loop so much on the show. So just basically as a quick reminder or primer on that again, it is a simple setup where your AI agent can run experiments on an auto indefinite loop in theory until it gets interrupted by a human, and doing so many iterations with the goal of improving whatever system you're using. And I started to do that with the GigaBrain to see if I can make the memory recall better. And I realized that after basically the first 20 tests, I completely stopped understanding what is actually happening. It started to use language that I did not understand. It started to use mathematical terms that I did not understand, change experimentation setups that I could not follow. And it is weird because it's a thing that I built from scratch, like from ground up. And I have no idea about how these experiments are working and what we are actually measuring and why. And it doesn't feel very satisfying. I can see that whenever I run the tests and the audits, that stuff is getting better, but it doesn't feel cool to not understand what's going on in your own project. And I feel like that if everyone's doing more machine learning and more training themselves and the building things and stuff that are so complex that you just can't understand what's going on. I don't know if this is not gonna become like it's frustrating, but if this is not gonna become even dangerous to a certain extent when we're reaching a point. And we had this conversation with Brad on the show, when the engineers can't understand the product that they're building, and if the product breaks down, who is then able to fix it if the service itself is not reachable anymore. And I do think that we're going to move into this direction very, very expeditiously.
Yeah, I think that's completely fair. I think that's definitely going to happen. I think that's going to be one of the issues that exists. Yeah, it's not going to be. I think it's definitely going to be the case that people are going to not know what they're doing and stop. Well, it's just you don't need to have the attention to detail anymore, do you? Because you're entrusting everyone else, the the platform to do it for you. And so I think we're definitely going to go in that direction. I'm a big believer in general of having the underlying foundational knowledge, and so someone is going to need to do the checking. I do not believe that you're going to have 4 agents to do the checking for you, and they're all going to check each other. It's like, yeah, no, you're still going to, if you're going to run a competent ship, you're still going to need the person who is the expert. If you decide to employ 100 agents, then you're going to have humans managing 100 agents. How many humans are you going to need per agent to check what they're doing? So I think it's going to be the same in the normal world. Like if you think about it, if you're going to replace, I don't know, junior lawyers with agents, just as an example, then the senior lawyer is going to have to manage the agents who've replaced the junior lawyer in the exact same way they would have managed the junior lawyer. So it's not as straightforward as people think, I think. But curious, Phunky, what's your thought here? You've kind of come in straight away. Welcome to the stage, Ram. What's your thinking?
GM guys, no, legendary. What you were saying was so reminiscent of something Danny Hillis. So I want to drop a TED talk in the Telegram chat for you guys. But basically in 1997, he did this with supercomputers where he and his engineers created programs. They fed them into the supercomputer and they basically wanted something that was doing some kind of math function. And it said, like, basically take these programs, make them better. And they just continued to, the supercomputer continued to iterate to when it spit out what was done, the product, they had no idea what it was talking about, but it was far more efficient than anything that the human brain could have ever made. This is 30 years ago. And in this TED Talk, he presages sort of like where we are right now today with AI and how this is sort of, he gets into this philosophical conversation about, are human beings really the end of the evolutionary chain? And perhaps it's going from, we're seeing it switch from carbon to silicon-based life forms in this next massive like paradigm shift. So what you were saying, legendary, was so close to what Danny Hillis was saying 30 years ago. And it was really shocking to me. That's why I jumped up and had to throw up my hand and share this. I'll drop the link for you guys for anybody who wants to watch it, because I know we're a nerdy bunch.
Love it.
We are a nerdy bunch. So yeah, drop in Telegram. Phunky, appreciate you for that. And remember, guys, if you want to join Telegram, we've got a whole community there chatting away around the clock. Outside hours, we do have a one-time admin fee to join if you would like to join in 2026. But it's a fun place to chop it up post-show and pre-show. Okay, let's get into the main stuff today. As I said, we've got a bunch of interesting stuff to get into, and for the first time in a while, a new opportunity. I don't know the last time I have thought that we have a reasonable airdrop opportunity to go after. Well, it's certainly been a while, at least, given that was one of our specialities. So happy to share that today. Already have shared it in the Telegram, so we'll get into that in a bit. But let's get to the usual stuff to get you up to speed with what's going on in the markets and the main headlines that we'll be talking about today. We've got Bitcoin down 1% to 69.5K. We've got ETH down 1% to $2,000. We have XRP down 1% to $1.38. Sol's down 2% to $85. And Hyperliquid is flat around 34.60. Hype is up 7% on the week, though, whereas everything else, out of these majors at least, are red. On the meme coin side of things, let's just refresh to make sure we got the latest prices. We have, hang on a minute, can that be right? This is a lot of green. Oh, it's not. I refreshed, it's not. It's red. Doge is down 3% to around 9 cents. Pepe is down a few percent as well. Bonk's down 1%. Pengu's down 3%. Pippin's down 1%. SPX is down 5%. Generally, red day across the board on the meme coin side of things. And I wonder whether we stopped doing the meme coin segment anymore. Clearly, we started it because meme coins was one of the most important things. Maybe we should run down the Hyperliquid board and talk through the things that are getting most volume. Maybe that would make most sense. We're curious for your thoughts on that in a second, Ledge. Headlines that we're going to talk about today. We're going to talk about oil settling around $85, but still very, very volatile. Dropped as low as 78 on Hyperliquid yesterday. The US-Iran conflict continues to rumble on. We'll try to bring you some of the most helpful bits of information, although it's very, very confusing stuff with conflicting information from both sides, I think. So we'll do our best to get you the download today. Simultaneously, Bitcoin's fallen beneath 70K again, so we'll wrap that into that conversation, and we'll talk Meta acquiring social network for AI agents Moltbook. I know Legendary will have a good breakdown for that. In terms of the market roundup, Kraken's tokenized stock venue xStocks starts a point program. That is the point program I was referencing. We'll talk about that in a moment. StarkConnect announces STRK20, a privacy capability that gives any ERC20 confidential balances and private transfers, which I'm very intrigued by. Polymarket to work with Palantir, of all people, to develop and analyze and notice trends of suspicious activity. That was not on my bingo card for this week. Palantir probably doing work in the Middle East and now with Polymarket to get inside traders. But I thought the whole point of prediction markets is that you're supposed to allow insider trading so that you get the good information. I'm not sure. Let's talk about that as well. Aave experiences a glitch which causes 34 accounts to lose $26 million in improper liquidations. That is not great to see. Rect and Moonbirds tease a collaboration on a potential new drink. Keeping my eye on that. And finally, football ownership group Soulmate to wind down the underperforming football teams and focus on a sole strategy. I don't know if that's a bear market thing to do or a start of a bull market. I think maybe we're still in the depths of getting rid of all the nonsensical parts of the bull market, to be perfectly honest. So that is the roundup to get you guys up to speed with everything that you need to know from the last 24 hours. Before we hit the main headlines today, Legendary, is there anything catching your attention before I go into my segment?
It is, and it is the same thing that you found interesting. What are Palantir and Polymarket doing together? So what they are doing is that there's going to be surveillance models, but very specifically for the sports prediction side of things, which makes sense if you think about that, because this is a market that is very competitive. It's the market that both Polymarket and Kalshi love to lean into to get nationwide access in the States to sports predicting. And for that reason, they also want to stay regulatory compliant. And it is a bit of a slippery slope that the prediction markets are walking with that. And the result is, for Polymarket specifically, that they did partner with Palantir to be able to track what is going on with, as you said, insider betting, other suspicious activity, but very specifically when it comes to attempted manipulation, coordinated activity around injuries, lineup changes, officiating developments, media leaks, all of that tied to the sports betting side, which I find, all in all, I understand why they're doing this, but it's still hilarious news to now hear that Palantir is building oversight and surveillance models for a prediction market to track insider and suspicious activity in sports betting. You are muted.
Maybe it's to do with this part here where it's talking about helping. Just keep it still for a sec, I'm reading from your screen. It's talking about, oh, where's it gone? Maybe scroll down, or
you said helping is the word?
No. Anyway, it's it was a part about talking about the integrity of the game. So maybe it's less to do with catching insider
there is the part.
Trading.
According to reporting from the blog, Polymarket founder and CEO said the partnership with Palantir and TWG AI would bring world-class analytics and monitoring to sports markets, but also helping leagues and teams maintain confidence in game integrity. That frame is important. And not only trying to protect their own platform, it's signaling to regulators, leagues, and users that prediction markets can build institutional-grade oversight.
Yeah, so I think, I think that is the integrity of the game. I think is something worth trying to investigate and figure out, because you want the outcomes of competition to be fair. I think one of the question marks that people might have is that increasingly there are types of markets listed. So look, if you're talking about who's going to win this match, sure, it's easy to tried to say, okay, we need to make sure the integrity of this game is clear. If we notice any irregularity there, we know that maybe someone is throwing the game potentially, and that calls into question the integrity of the match. But then they're also creating these other types of markets. For example, for the Super Bowl, there was a bet, I think, I can't remember if it was Polymarket or Kalshi or one or both of them, on that maybe it was the number of songs or the song list or the order of songs that Bad Bunny was going to perform on the Super Bowl halftime show. And in that environment, are they saying, and clearly I think it was an insider's market, right? Because there would have been people in the audience, sorry, not in the audience, people who had been in the stadium, maybe saw them practice. There would have been people close to the team who would have known what the answers were. Is that also then going to, like, is there such thing as having to respect the integrity of the performance? Are there rules around that? Obviously, I think it's maybe more traditional to think about the integrity of the game when it's two competitions and there's established leagues. But when you're just creating a market around things which have never really had a market before, it's not as obvious. I think in principle, it's the same thing. However, what are you going to do? You're going to notice that there was strange betting going on around the Bad Bunny set list, and then go after the accounts that did that, and it turns out it was someone in the stadium at the time, like a security guard who saw the thing. Like, is that what's going to happen? Because then that doesn't give you then the guide on information, which I guess prediction markets are supposed to be helpful for. So I'm a bit confused from that perspective when it comes to I get it for sport. I completely understand you need to keep the integrity of the game, but then there are these other kind of markets where it becomes less clear. Do you know what I mean? Is that making sense?
Yeah, I know what you mean, and I think that the reality here is we care about the integrity of the game from a platform's perspective, because this is where most betting volume, prediction volume, whatever happens, and this is where regulators are very sensitive to, and this is where competition, who has other sports betting licenses and would view a Polymarket, would view a Kalshi as a competitor, would probably be the most aggressive to want to have a lawsuit on, or to get the regulators' attention to these prediction platforms, whereas probably nobody's going to care about a bet that has 100K in volume that is to do with the number of songs or whatever else is going on, because you do follow the money and do follow the betting or predicting volume. But in principle, I very much agree with you that it is the same. If you wanted to respect the integrity of one, you would have to respect the integrity of all other bets that had a similar setup, which could be exploited, which in practice is probably not possible to do, and would also basically be counterintuitive to what you actually want with the prediction markets. If you think back to the framing of them being a truth-finding machine, and they can find the truth because some people know more than others and can express that in a monetary way.
Yeah.
So
yeah,
there's a conflict between integrity and truth-finding if you have a monetary layer that kind of wants to tie these.
Yeah, exactly. And that's my thing. Okay, so maybe this is exclusive to sports models, but the whole point, who's going to be the next chair of the Fed, for example? That was a market that was going all the time. And to be fair, it moved up and down quite a lot over time. And then I think at some point in time, the favorite emerged, and it was known before the final moment of the announcement, I think, if I can remember correctly. But there's been many similar examples like that. So intriguing stuff. We'll keep an eye on that kind of stuff as usual. One thing I wanted to bring up before we get into the main headlines today, and remember we're getting into a conversation with Mav from Cerebro today as well, talking about smart insights that he's getting from building Cerebro with tens of thousands of wallets and data that they're compiling. So looking forward to that conversation. But this is the thing I wanted to bring up. I shared it in the Telegram already for the people who are in there. This is one of the first interesting opportunities I've seen in a while. I think it's been a challenging market. As soon as you go into a down market, teams are less likely to tokenize. There are, maybe the main winners from a cycle are already done, and maybe it's a new funding cycle. You're looking for places to put your capital, but the returns are no longer, you're certainly not getting the same returns that you would as we're in an uptrending market, whether it's just allocating stable coins or farming points. I think there's been a big, or certainly a lot of lackluster returns. And so it's not obvious where to park your stuff. But this opportunity is one that is new, which I thought was kind of cool. xStocks, which we have spoken about in the context of tokenized stock trading. Sometimes when we've spoken about it, we've spoken about Ondo, for example, as a good way to buy stocks on chain. You can do that on Ethereum. I think you can do it on Solana as well. You can also do it via their platform. And that's been one good way. The other very good way is xStocks. It's a mean by which you can buy tokenized stocks on chain, powered by Backed, and with strong relationships with the Nasdaq and Kraken. So for a little bit of context, if I even bring up that tweet from them, or their latest tweet, I think they are the ones who are involved with Nasdaq. They said the xStocks framework will power a new gateway connecting Nasdaq's tokenized equity market with blockchain networks. So TradFi is not so traditional anymore. So the point being, this has been a product that's been around for a while. People like it. As soon as I shared it in the Telegram, there were a few people saying, yes, this is a good product, although maybe some questions as to why you'd use this one over Ondo, or why you'd use any of these versus a brokerage. I think that's actually a separate question. My position here is, if you want exposure to stocks on chain, this will be a cool place to get it, because they've just announced a points program. And obviously in crypto, we know what points program means, we hope, although I caveat that with, maybe these days, who knows how long points programs go on for. I'm not saying this is going to TG tomorrow or next week or next month and make you rich. But the point is, given that we're going in a direction, this is my thinking anyway, given that we're going in a direction where people are bringing more stuff on chain, stocks on chain seems to be a valuable vertical. If this is a valuable protocol and they are doing a points program, it would be reasonable to think maybe there might be something in it for you. And so if you're going to do it anyway, you might as well do it with the people who are maybe giving you some upside as a part of it. So, they haven't announced anything formally. There is a points program. I think it's a helpful one to participate in if you want that on-chain exposure. Now, to the question of should you do this versus just having your stocks in a brokerage, I think that's a separate question. Probably there's no distinct advantage, I don't think. Although I think that they're going to roll out different ways for you to be liquidity providers on stocks. They're going to roll out ways for you to be able to borrow against your stocks. Now, I know some of those things you can do already in your brokerage, but maybe some of them you can't. And maybe you want that flexibility on some of your on-chain assets. So again, it's just an alternative option for you, I think, if you want stock exposure on chain. Doesn't replace your brokerage allocation. So that's the option. I think, Ledge, we're going to put again, this is not a sponsored segment, by the way. I just think it's a cool opportunity. I'm kind of excited that there's one that we've got one for the first time in a while. We'll put the tweet, which has the ref link in it. If you want to participate, we'll put it in the comments to the show on Twitter, and we'll put it in the YouTube and Spotify comments as well if you'd want to participate. But that's that. Led, what do you think? Curious for your thoughts, and also answering some of these other questions about where to buy your stocks in the end. Would you start buying stocks here for this reason?
So I'm looking at the website for the first time. I was looking at it as you were speaking, and there's two things that I liked. They have this xStocks alliance, which is not only Kraken, it's also Bybit, it's BNB, it's Chainlink. There's quite a few Phantom, KuCoin, Solflare, quite a few very notable companies. And B, if I looked at the asset universe, which is the list of stocks you could invest, I liked that it has more than the typical NVIDIA, Apple, Tesla, Amazon, Alphabet. You have AstraZeneca, Bank of America, Berkshire Hathaway, Coca-Cola, you have Walmart, McDonald's. So you have a broader selection of stocks. And I'm going to be curious to see how much liquidity they get, because this has been traditionally the issue. And if I understand this partnership correctly, then they could boost that with a very fair amount of liquidity to make that tradable. Now, with all of that being said, also interesting, by the way, you can trade on Solana, ETH, and on Ton. I'm probably not going to use that excessively because I could use it as a way to try to farm points, but I can't use that in excessive volume way because in my country, we treat stock derivatives like that from a tax perspective different. We tax this at income tax, which goes up to 55% here, as opposed to capital gains being exactly half of that at 27.5. So exploring with it, yeah, making it my main trading venue, not from a tax perspective.
Got it. Yep, I think that might be the sensible way for most people to do it, right? It depends on your specific scenario. But I think if the answer to the question is, do you want some on-chain stock exposure, then this is a very reasonable place to do that. Albeit it might not take over all of your stock thing, and in fact maybe that would be unwise to do that. Okay, cool. Glad we managed to share that opportunity. First one in a while. I think that might be useful. Ref links in the comments, and hope that is helpful. I like that one. Got me quite excited today. Right, let's get into the main headlines. Today we've got a couple of main ones to talk about. We're going to be talking oil at $85 as the US-Iran conflict rumbles on. So different ways to go about this today. I think maybe just the key update, I think, is that this headline from Reuters: oil shrugs potential IEA reserves release, gains on supply worries. So I think yesterday oil on hyperliquid dropped down to 78, and then it was obviously a 30% move down over the previous 24 hours, on maybe the idea that the conflict would not be as bad as thought, and that maybe there would be a resolution. A lot of the commentary coming out of the States was suggesting that the US is entirely on top. This is going to be fine. And then maybe a few more worries came through yesterday. My understanding is this morning and yesterday, the attacks on the various kind of GCC countries and some of their key locations have continued to be attacked, as well as reports that Iran are not letting the ships go through the Strait of Hormuz still. So that is still an issue. One response to this is that the IEA has proposed a drawdown which would exceed the 182 million barrels of oil that IEA member countries put onto the market in two releases in 2022, when Russia launched its full-scale invasion of Ukraine. This is according to the Wall Street Journal. So that they're trying to offset the potential supply shock here. But remember, we spoke yesterday. An interesting knock-on effect of this was that which country was it yesterday? Bangladesh, I think, had started to close certain, not entire industries down, but started to close schools down, and started to tell people to work from home because they said, look, we need to go into energy preservation mode here. We should not be. We're going to get a bit defensive here because we're concerned about getting this energy to where it needs to get to. And I think there's been a few more stories like that from around the regions. What else is there to know on this? I think, yeah, so the price of oil has ticked up, gone just above 85 again now. And along with that, we've got Bitcoin and stocks looking kind of vulnerable again. Bitcoin's just fallen beneath 70. Stocks are kind of where they were yesterday, I think, although they were rising into yesterday. So that's the position that we're in at the moment. All kinds of my general takeaway from the very disjointed sets of messages that you're getting from around the world is that it may not be as straightforward as people think. It seems to be more complicated than people would like it to be. I don't think it is as near to a conclusion as people would like it to be either. But then, what do we know? This is clearly above everyone's pay grade here. We're just trying to get on top of it, and as best as we can. So those are some of the takeaways from maybe the past 24 hours. What's your view on what is taking place? Was there any other interesting bits of information that you thought that would add to the conversation?
Yeah, there's two things that I want to add to that. On the one, so the thing that I'm monitoring a bit more now are the Japanese markets, including the Korean Kospi, the Japanese Nikkei, just to see how they've been reacting, because they have been so volatile. On the day where oil did go above $110, both these indices crashed 6% each. They did recover the exact same amount the day after, when Trump said the war is almost over, and oil crashed, which we had reported on yesterday. And now Japan's prime minister came out and said that they will be the first one to start releasing oil reserves as soon or as early as next week. And the Japanese stock market, the Nikkei, is up another 1.4%, and so is the Korean Kospi as well, which also means that both of them are up over the week. So they have more than corrected what has happened. They're up 7%. The Kospi is up 7% over the week. It's still up 5% over the month. And it is massively still in the green, obviously, year to date, because we talked about Korean stocks being up 30% year to date. But the point here is that whatever fear that was out there regarding the Iran war and the oil price, for now seems to be more than mitigated, because the rally continues. And I kind of find it hard to trust that. So again, I'm still maintaining my position of not actively trading that and keep buying what I keep buying either way. But this relief rally, I'm a bit skeptical about in the Asian markets. Not being an expert of any sorts on that, it's just my gut feeling and instinct when I check the reality of how little we know what's actually going on and how the situation in the Middle East will evolve, to how relaxed the markets seem with it at the moment.
Interesting. Okay, well, this is what a Goldman Sachs analyst had to say about it in a Reuters article. Said, in a note to clients, Goldman Sachs analysts said that a stockpile release of that size, which they are planning, would offset 12 days of the investment bank's estimated 15.4 million barrel per day Gulf exports disruption. It doesn't look like the oil market thinks that the largest ever release of strategic reserves will help much against the current crisis. So that's one perspective that is out there. Okay. From one Goldman analyst to a former Goldman analyst, Stats, I wonder whether you have a view here on whether it's the oil price itself or whether it's just the general developments. Again, how are you viewing the situation? What's your thought? What are your thoughts here?
I've been again in and out, so I only have kind of limited context. So you're talking about the overall stock market or crypto market?
Stock market, oil, how oil is moving, and just the general situation as it kind of plays out.
Yeah, I gotta think at the end of the day, we always say not financial advice, not financial experts. I am exceptionally not a geopolitics expert. I've been paying close to that shit enough attention. Almost for the one of few times in my life, I actually don't even want to give an opinion because I don't have a strong enough context here for how to think about things. My intuition is that at the end of the day, people don't want this chaos, and once things start to feel like they're calming down, I feel like that's going to fall in line. But and I feel like that's kind of what's happened almost every time that basically almost every time we've followed stock markets for reasons other than interest rates. It feels like it kind of has a self-correcting mechanism, but that is not an opinion that I want anyone to quote me on. I gotta do a bit more work here.
Completely fair enough. I think it's definitely one of those examples where we're holding our opinions I wouldn't even say strongly but lightly, just not even strongly and very lightly in these particular situations, as the information is constantly changing underneath our feet. Maybe a couple of other, again, this is just additional information, and it might feel like a barrage of information, and trying to piece it together is not very easy. But after the news that the IEA proposed the largest release of oil reserves yesterday, there was additional context where apparently, I'm trying to see what the source for this was. The US Navy has refused near daily requests from this is Reuters as well. The US Navy has refused near daily requests from the shipping industry for military escorts through the Strait of Hormuz. And I guess one of the things that Trump had been saying was that, we might be able to, make sure this stuff keeps moving. We need to keep the oil moving. And in order to do that, we'll do whatever it takes, right? And escort the stuff if necessary. But it sounds like this latest article from Reuters has contradicted that. And I think ultimately that's why we are so confident in saying that we should not be confident, because we're getting so much conflicting information. The administration are sometimes saying different things between different people as well, whether it's Hexeth, Trump, or Rubio. These are the three who seem to be saying potentially relevant things, but it's not always obvious that they are all joined up and that you can draw concrete conclusions from it. And, so you have this kind of information suggesting that this was an article from Reuters that, they are not going to be able to escort this stuff out. So I guess maybe if you had to trying to think about how to think about this situation, maybe you're zooming out and trying to ask yourself the question, do I believe, how confident am I that this conflict goes on longer, or how confident am I that this ends quickly? And maybe that's the way to simplify the thinking, although obviously the way to come to an answer to that question is by getting into the details. Maybe it's not easy. Ledge, do you want to close off on this segment, because I think that's probably reached the conclusion there. What do you think?
Nothing to add on that. I think that going forward, we're still gonna try to report on it and cover it as best as we can, doing the live research on top of that too. But yeah, it's not gonna be the cycle where we're gonna turn into geopolitical experts to be leading in terms of trading what is going on.
Yeah, I mean, if it was a pure trader here, I might think there could be a bit of a mean reversion on oil. Like a 30% drop in one day was maybe too extreme. Maybe it needs to just bounce higher. But this is a market that is not our speciality at all. So let's see. That would be my pure trading instinct, but we'll keep on top of it. Right, we've got one more headline to get into. This is an interesting one, bit of a deviation from where we've been. Let's take us through what's going on with Meta and Moltbook. And this is before we get into the conversation with Mav shortly on what he's building at Cerebro and what he's doing with all this fantastic data he's getting from smart wallets. So let's take us into this.
Yeah, that is a fun one. And it is to do with Moltbook, which went very viral a bit more than a month ago, in a time where OpenClaw was still called CloudBot, and someone had built, or this founder duo had built, Moltbook, which I'm going to get up on screen in a second, which is basically a Reddit for AI agents. Right now, you have 200,000 human verified AI agents on there. Moltbook did used to have more than 1 million, but there was also massive spam and botting of that going on. But now you have 200K agents posting in 20,000 submodes, which are subreddits, doing a total of over 2 million posts, 30 million comments. And that in itself was interesting enough to Meta that they decided to hire the duo behind Moltbook. They are going to start in Meta's AI Superlab. They also acquired Moltbook as a result of that. We don't know anything on the purchase price. That we haven't had any details. The only thing that we do know is that both the creators, Matt Schlicht, Ben Parr, will join the Superintelligence Lab. They will do that apparently or presumably from next week on, from March 16th. And it is an interesting development that we are seeing, maybe more general than just this Moltbook news specifically, because we had obviously this happening. We had Peter Steinberger being hired by OpenAI and joining their team. We had another guy, I think, who was working on an orchestrating system, who ended up being hired by Alphabet, by Google, to join their labs. So also as an extension of the conversation that we had yesterday, be with, what was the name? Cluely? Was that the company that we talked about? And their founder went viral with the video, and we spoke about like this founders fund and how much distribution matters. It definitely helps in this agentic meta to be present, because Matt was very present on socials, to have something out there that goes so viral that you get like instant distribution with it. And it seems that now a good like exit pathway is just to be absorbed both as a human and product by one of the big three, big four AI super labs. So that's a very, very fast exit route, because ultimately this product is 1.5 months old. It's like less than 60 days old. Peter was integrated in OpenAI in after like 88 days of doing that. Obviously, the way larger scale. I mean, it's now the biggest GitHub to ever have existed, but it's very fast. Like you can build something, you can get it shipped. That website or that like Reddit for agents was also built within a couple days. It had massive issues at the beginning, and by massive issues, I mean that the database with all of the API keys of all the bots was public, and someone helped to prevent that from getting exploited. And Matt fixed that in an overnight sprint with that white hat hacker who has found that vulnerability. But you could still build things, launch them in a even like half ready or even dangerous version, and get so much distribution that a month or 2 months later, you can have this exit path to be absorbed by one of the big AI companies, which is fascinating.
That is very cool. Yes, it's pretty. I saw like a joke that I think the way to wealth in this cycle, whatever cycle we're in, is that you've got to code something, and you've got to make the name something to do with the company that you want to buy you. So Moltbook obviously being half of Facebook, Meta is obviously Meta now, but and OpenClaw being half of OpenAI, and then they're just going to come and buy you for a lot of money. That's the way to generational wealth, I think, at the moment. Maybe one question I'd be curious for Stats' perspective on this, given that he has significant corporate experience here. Stats, what do you think about Zuckerberg's M&A strategy? I read just recently that he paid a lot of money for Scale, which is this AI company, and it looks like that's not working out. And I think there's been a variety of things where he's kind of been on a buying spree and it's not quite working out, but he's certainly not afraid to splash the cash in order to try to stay ahead of the curve. So what do you think about his strategy?
I feel like when he bought Instagram, he kind of gave himself a pass to make a lot of mistakes in the future. That's right now. Yeah, I mean, look, when you're a company that big, and you see cool stuff out there, you just buy a ton of stuff. I mean, it's a multi-trillion-dollar company, so you have a lot of ability to buy stuff. I think because Facebook bought Instagram, that became half their business. Because Google bought YouTube. I mean, there's just so many things in the Google bought Waymo. I mean, there's so many different things. Although Waymo's not really proven yet, I guess. That I just imagine that these founders know that if it's kind of like venture capital investing, like if you hit one out of the park, it's going to be so accretive to your shareholders that they just take a lot of swings at stuff. So I don't know. I mean, it's an interesting sign for where the industry is kind of like quietly heading, or where the industry wants to be. But I don't have too much thoughts beside that.
Yeah, I think that's exactly right. One thing I thought is that I think with the Scale version, I'm not entirely familiar with the legal structures in America, but I think in order to avoid the anti-competition stuff, they had to structure it in a slightly different way, which was interesting. But the net effect was, of course, absorbing them into the company and still getting their chance to kind of work with them and take them off the market, basically, and get them on their team. So
when you're worth like $3 trillion, it's like these acquisitions, you can do a lot of kind of fucking around and finding out.
Yeah, I think that is right, and that's to be expected. And I think you're right. When you've been so successful so far, you kind of you earn the right to go out and stay on the edge and keep going for it. So interesting stuff. Glad we got to that one as well, because I think that is interesting news. And we want to get into another interesting conversation here as it relates to data, portfolio tracking, and what we can learn from what a lot of the smart people in the industry are doing. Today, we want to welcome to the show Mav. He's the founder of Cerebro, an AI-powered portfolio management platform that's quietly become one of the most important tools in crypto for people wanting to manage their portfolio. Cerebro launched in mid-2024, hit 80,000 users without... so they hit 80,000 users and just dropped their Genesis NFT collection. The platform tracks crypto and NFTs across Bitcoin, ETH, Sol, and Hyperliquid in one dashboard. And now they're building something more ambitious as well, an AI engine that doesn't just track your portfolio, but actually executes on your behalf. So curious to talk about the portfolio side of stuff, the data side of stuff, what people are doing in these wallets, how activity is moving and progressing, and also this AI component, to what extent we're able to start getting agents to execute on our behalf when it comes to our portfolio. So great to have you with us today, Mav. Welcome to the show. How are you doing? Mav, I cannot hear you at the moment. Legendary, can you hear him?
Nope, neither can I.
Interesting. Let's get that sorted as soon as possible. Mav, are you there?
Can you guys hear me?
Yeah.
Yes.
Can you guys hear me?
Yes,
All
we
right,
got you.
okay.
We got you.
Yeah, it was a settings issue. All right.
Good stuff.
Nice
so
to
we've
be
got
here.
Mav with us.
Thanks for having me.
Good to have you with us, man.
Cool.
Good to get a chance to chat. So, why don't you give us a bit of a background on what you guys are building, and actually a little bit about yourself. Like, we've met once already. Give us a bit of a background of who you are and what you're doing.
For sure. So I'm born and bred in Singapore, which is a nice sunny island in Southeast Asia, for those who don't know. I've been born, bred, educated in Singapore. So it's kind of like a made in Singapore product. I then spent my time after graduation actually working a bit in corporate finance across a number of big multinationals, supporting them with financial planning, analysis, as well as a lot of data analytics, which incidentally enough had a lot of crossovers with what I'm doing and building with Cerebro. Yeah, so that's about me in a nutshell. I think I've been in the space for quite a while. Got into crypto in 2017, but only got to be a bit more loud, I would say, on crypto Twitter in the 2021, 2022 NFT bull run. Yeah.
Got it. What got you into crypto initially, and what was maybe your biggest successes which led you to stay? Because I think one of the things we've noticed recently is a lot of people leave, right? A lot of people leave, a lot of people get burned out. What made you stay?
Yeah, so it's going to sound really dumb, but so I was actually class of 2017, right? And I'm not sure if you've been around in 2017, but there was like a huge ramp up, especially towards the end of the year, with ICOs and crypto just going absolutely parabolic. And what happened was, I got in, let's say, mid 2017 with a small amount of capital. And then as I saw my portfolio jumping parabolically, I thought I was a genius, right? I thought I was super smart. But then, everything started crashing from 2018 to 2020. And I just felt so dumb. But why I stayed was because I felt that during the parabolic run-up in crypto, one thing that really stood out was the amount of greed. And I just told myself, right, that if anything, human greed would come back because put the tech aside, right? Like crypto is kind of like the world's largest unregulated casino. It's available 24/7. And people will come back as long as there's money to be made. That's kind of like the truthful, non-politically correct answer. But yeah.
Very interesting. Yeah, I think I think betting on human greed coming back is kind of, well, maybe that's what's keeping people sticking around to some extent still. When the markets go down, right? You just assume that greed will come back. Fear and greed index at the moment is saying we're in complete and utter fear. So I think you've got to wait a while still. You mentioned you're in Singapore, Mal. We're going to talk about the product and stuff and all the data and insights that you're getting from that in a moment. But maybe one more question on Singapore. There's a lot going on in the world at the moment. Incredibly volatile place, the world in general at the moment. Conflict in the Middle East has affected Dubai, which has been one of the biggest hubs for business and commerce and crypto. How is Singapore standing at the moment? I know it's been a very successful place up to date. How's it kind of responding, reacting to all of this general world conflict at the moment?
Yeah, I think for those of us who are in Singapore, it's been relatively safe. And I think we are very privileged to be in that position amidst all of the volatility that's happening across the world, right? Not just in the Middle East, but also in Russia, Ukraine, and many other hotspots. I would say Singaporeans feel very thankful to be in this position. And there is a kind of calmness to what's happening around the world, especially because I think the recent conflict that's just started is about 2-3 weeks old. It hasn't really hit people as hard as it probably will in the coming weeks if it continues on. But yeah, I think generally life is pretty healthy, but there are definitely concerns that this conflict in the Middle East could spiral into a bigger problem, not just for the region, right, but for the world. And Singapore is so interconnected. We are basically the hub for a lot of traffic. The Straits of Malacca handles, I think, 20% of all trades. So yeah.
Just maybe one follow up there. Does Singapore have a particular leaning when it comes, or is it kind of like a Switzerland of that particular region? Is it trying to stay out of things most of the time?
Yeah, for sure. I think like we kind of position ourselves to be very neutral, and that I think that stance has been officially mandated. And I think it makes sense, right? Like we don't. I would say we don't necessarily want to get into conflict, but we don't wish to position ourselves as seen to be biased towards one side or another when there is a lot of ambiguity as to who's the aggressor, what went wrong, especially in decades or centuries old conflict. So we tend to be just very careful, but that doesn't mean that we don't have humanity, right? I think we did make a statement, if I'm not wrong, around the plight of what had happened in Gaza. It was like we reaffirmed that there should be a need to allow for the UN peacekeeping mission to access Gaza, if I recall correctly. So yeah, we do speak up, but we often tend to be very neutral in our poise.
Yeah, that makes a ton of sense. One of the things that I want to get into that I'm really curious about is on the product side of things. So I found a press release back in August where you said you have 10,000 daily active users. Back then, that was the number, 80K users plus in total tracking their portfolios. I'd be curious to know how user numbers have evolved. And B, the really interesting thing is that's a massive data set. So what can you see that the rest of us can't see looking at that data, looking at what this aggregate view of this 80,000 plus users tracking the portfolios in crypto is right now?
Yeah, so first of all, I think growth has been pretty good. I think we have about 200,000 users and 10 to 15K daily active users even in the recent weeks. I would say that but before I get to all the insights, I need to share First, we are very privileged to be in the position of having this service and platform where so many users are actually utilizing us. And we want to assure everyone that we only have a bird's eye view of what's happening. We don't have access to your individual portfolio or wallet data. That's all firewall away. So that's the first important point. But having said that, I think there's some very unique insights. The first I would say is that most people actually have about, right? They don't have tens or hundreds of wallets. They have about 5 to 7 wallets that they use on average. And there's a concentration towards just a few specific chains. I think the major ones is Base, Solana, followed by Hyperliquid, if you consider Hyper EVM as a standalone ecosystem. And of course, Ethereum itself. But I think that there's a lot of concentration around how people actually position their assets. And I think on the prompting side, so we have an AI agent actually embedded within the platform. And what we have noticed from like surfacing up some of the queries is that people just want to make money. Like the number one, query that people are putting into this into the system is how do we make money? How do we make money? So those are some of the interesting insights that I can share.
What does that look like, Mav? So you say when you say someone's inputting a query, how to make money, talk through that. Yeah. What aspect of the product is that? What kind of response do they get when you ask that question, and where does the answer come from?
So I think I think a lot of users, when they look at an LLM, their instinct is to try to figure out, type in like all of the things that you want to do. But the number one most highlighted question is always around how do we make money? And what we have observed from the responses that are coming through in terms of the answers that we give, it's centered around the user's assets as well as what's actually trending, right? Like what's in vogue, and we actually do kind of an assessment of matching those assets against what we think the users might want based on their portfolio position.
And are there some main trends that you are seeing right now? Like, are the users now more risk on, risk off? Is, you said Solana, Base are the most popular and followed by Hyperliquid. Are people now moving even more to Base? Like, what are some of the key things that you are finding at the moment?
So I actually wanted to share something that's actually very interesting, which is that the amount of people who are prompting and asking the AI agents actually not that high, right? And we think it is the reason, and we think the reason is because the user interface in which you get, a user has to actually ask questions and getting a response probably isn't the right way in which we should approach how users are able to get information on what they should do. So what we're actually working on very much is what I would call agent orchestration. And this means that we look that having access already to your portfolio data, having access already to your assets, and also having information around what's happening across the markets, across social sentiments, we then present to the users different things that they should be doing. So for example, you might be heavy in Hyperliquid, right? Hyperliquid has gone up 10%, but we might then give you a cautionary note that you might want to still take profits given that it's maybe, let's say, 95% of your portfolio. So these are some of the kind of capabilities that we are building out such that we actually surface the information to the users for them to execute, rather than the users having to actually key in prompts and get information out of an LLM. I don't think that's the future, if I can be frank. Yeah.
That's super interesting because we had Alex from Nansen on the show last week.
Yeah.
And Alex's vision was more that the future of trading is people talking LLM is like they're not looking at the chart. They're like more in the mood of, oh, okay, what is trending? What could I buy? And your future vision is to see that people are actually not really using AI, not using Alice too much because they don't want to prompt. And is the thinking here because a Cerebro user basically has done this extra step of already giving up all of his, not giving up, of already sharing all of his wallets, inputting them into Cerebro, and basically having shared the data. And now they don't want to ask any more questions because they're of the mind Cerebro has everything it needs to know, the AI needs to know to tell them what could be interesting for them.
Mhm.
So
Yes. So I think
thought-wise, or?
Yeah, so I think I watched a bit of that episode, and Alex's view was kind of, users would be prompting and getting information around what to do. But our view is that actually, if you think about it, like prompting into an LLM isn't really the right way in which users want to interact, especially for trading, because the pace, the velocity, and the frequency in which you have to execute is very fast. That's one. And second, I think that a lot of times that users don't really know what they should prompt, right? I mean, which goes back to one of my initial observations around users just asking, how do we make money? How do you actually, get ROI from a trade? So our thinking is that instead of having to, wait for the users to prompt Alice, we would actually intermittently throughout a day give the users recommendations on actions and things that they can do, right? And this can be ways in which they can manage risk on their portfolio, right? This can be ways in which there are certain, moonshot tokens, right, that we think have high potential. And then we pass that information on to the users. We give them our research thesis and we say that this is, a moonshot opportunity. You might or might not want to take it, right? So that kind of recommendation and orchestration exchange is what we do. Sorry. Yeah.
So I guess the crucial question there, Mav, is how do you, on the back end, come up with those recommendations? What's the model or framework for investing that is being used to suggest, like, okay, maybe you're up 30% on this, maybe you should take some off? Like, what's the underlying principle that your recommendations are going to be trained on?
Yeah, so it's actually fairly complex because there's quite a number of parameters that we look at. I think the starting point that we focus on is that your portfolio should be the base upon which we make any recommendation. So we look at, for example, how are you dispersed across your assets? What level of risk you have? How liquid are you? What kind of risk tolerance do you actually have by looking at the kind of assets that you carry, and then tailoring recommendations to a user. So for example, someone who's not really into meme coins, right? We probably wouldn't recommend him or her a very low cap coin to buy, right? As in, we will focus on surfacing information around the majors, for example, Hyperliquid, Ana, etc., because then it's a very personalized interaction. Like you feel that you are getting a personalized financial advisor actually telling you based on your portfolio information, based on your risk profile, based on the trades that you have been doing, this is what we think you should do. Yeah.
Is it then also based on what, like, do you then cluster users and say, okay, there is a bunch of users with, say, I don't know, a risk score, just reference, I think goes from 0 to 10, and they have a risk score of a cluster risk score 2 to 3, rather low risk. They are sitting in a ton of stables. And a part of these users started to, I don't know, say move their funds to Hyperliquid because they discovered a stablecoin farm which would match. So are you looking at like what users in a cluster are doing and saying like 80% of users who are similar to you are right now looking into this and that? Or is it then, is it purely then research based, and are you not referencing like cluster users? That's the part that I'm trying to understand more.
Yeah. So we're using a combination, right? So I think one thing that's very clear is that you definitely have to take into account what the user themselves is like. So going back into their profile and how much risk they're carrying, and also what kind of risk tolerance and risk appetite that they have. Because I think like B-Check, I think you've shared several times that you are fairly conservative, right, in how you approach crypto. So for these kinds of users, and going back to what you have mentioned, right, like we definitely want to ensure that whatever we are recommending, how we want them to position is a little more conservative, and we don't want to over-index to push them to get into meme coins, for example.
Fair. Okay, so yeah, what do you think about this? I mean, we were talking about xStocks earlier today on the show, and we've been talking about tokenized equities a lot. Obviously, you've got equity perps going on as well. Maybe that's a separate thing to what you guys are doing. But what's your view on how equities are coming on chain, and to what extent that might be part of your future roadmap as well?
Yeah, I think for me, the two biggest, most interesting primitives, one would be tokenized equities, and two would actually be financialized entertainment, right? I think these will be the two big unlocks that I see this cycle. I think tokenized equities just brings a whole new asset class into crypto. And it now means that you don't actually have to go to your broker, for example, to hold stocks. You can actually hold them within different players, right? That custody these that offer these tokenized assets. And I think it's just very impactful in a way that you can actually look at these companies with proper fundamentals and be able to then also place them, right, and evaluate them accordingly. So I think that there's a lot of room for us to expand our capabilities to also look at stocks, companies, PE ratio, and making sense of a lot of that. I think in the coming months, that would also be a big focal point, right? Especially as they become more and more prominent.
Do you then also want to lean at some point more into the execution side as well? When you say the first thing is users don't have to prompt anymore, they will get recommendations that match them based on this research process that you just described. Do you want to do or have the option in the future to do the execution for that as well, where a user can be like, yeah, okay, I like this, click here, and then there is a way to have an agent either execute or help with the execution for that?
Yeah, so it would actually be combining both the theoretical research component with execution that we think is the beauty of agent orchestration, where you receive kind of an informational recommendation around what you should do, right? Let's say reduce 10% of hype in your holdings, convert that into base USDC, and then transfer that onto Aave for stable farm. We want to combine all of these steps such that you just need to execute once and it's done. I think that kind of layered agentic coordination is the next big unlock.
And is this then also basically, we had, maybe taking a step back, we had this intersection of DeFi and AI in 2024, DeFi bit in 2025, then it kind of completely died down. And do you think that this orchestration layer that you were just speaking about is being the revival of that? Because I feel like a lot of protocols right now are experimenting with how to integrate AI. You have OpenSea with a CLI that an agent like OpenClaw can use. You have obviously Nansen with a CLI. Do you think that the secret lies more in having an orchestration layer that can execute all of that, and you don't need to be the one who's integrating your CLIs and MCPs as an end user?
Yeah. I think the answer is what actually brings the most value and convenience to the user, right? And from our point of view, if the user has to go through a lot of hassle, basically thinking about what questions they should be inputting into LLM, and then figuring out how to execute the recommendations, then it's not a very convenient user interface and user experience for them to go through. So our thinking has always been to how do we reduce all of this into one easy step for them to just execute. We want to remove a lot of that friction, and we want to also try to help in the decision-thinking process by making things a lot simpler and easier to access.
Very, very interesting. And Matt, as we kind of come to a conclusion here, I'm just thinking a little bit to the past, but also to the future. You raised a bit of money via the NFT sale. I think that was one way you raised money. But what's the current status of the business model? I think maybe you guys had a subscription at one point. Are you still operating on a subscription model? Is that in the future, or what's the status of the way you guys think about monetizing the product at the moment in the best way and most efficient way?
Yeah, so we still have a subscription business, but I think even from the very beginning, we always knew that we had to kind of cannibalize on that, because a lot more tools are essentially coming into the equation. And you see people like Zeneca, right, building their own personal financial tracker. So we have never ever, we have never ever thought that a SaaS business in the way that we had originally built Cerebro was the future of the company. And so what we had been focusing very heavily on is around portfolio optimization and risk management. This means that we allow or we help users execute trades, and we help them with ROI, risk management, performance. I think that is where, if we are able to give real value to the users and being able to take a portion of that value back via fees, that would make a lot of sense. But we are also exploring, like what I think you may have alluded to probably, licensing out our API capabilities, like the tech that we have built. Like I think we have probably one of the most comprehensive portfolio tracking capabilities. We probably cover, I think, like the most exhaustive number of chains across, different ecosystems, NFTs, everything. And we know that like there are quite a few players who are approaching us saying that, can we work with you guys on using our API, because we love to build stuff. And we think that, that's interesting. We might explore an API play where we let individuals as well as enterprises use our API to build cool stuff. Yeah.
Yeah, I think that's a good one to explore, because as you said, I think there's a variety of options like yours, but yours is definitely one of the most comprehensive. And when you mentioned NFTs as well, yours is always one of the ones that always picks that stuff up, which I think is helpful. All right, Mav, as we're closing out here, just give us one idea, concept, part of the product that you want people to know about, that's coming in the future, that you're excited about before we close out.
I think what we are most interested in bringing to the foray in the near term is really trying to be both the enabler of trades and facilitator of all of the different pieces that are coming together, right? Like market information, social sentiment, and being able to allow the users to effectively execute on that very quickly.
Love it. Mav, it's been a great conversation. Thank you so much for joining us. Really appreciate your time. Been very insightful. Thank you.
Thank you so much. Cool. Bye.
Thanks for joining us, Mav. Right, guys, that's another good conversation. We've got another interesting one coming tomorrow as well. Just a reminder, we do this every single day, Monday to Friday, 7 a.m. Eastern time, live on X Video, YouTube, and you can catch us on Apple and Spotify podcasts too. We'll be back same time, same place tomorrow. Hope you have a wonderful day. Take care. See you then. Bye-bye.